Welcome to JSR Voice. Now I want to discuss with you one problem and its solution related to income from capital gains. I discussed a few problems already in the previous lectures. If anyone wants, you can go through all those lectures. You can visit my channel and you can select playlist. There you can select income from capital gains so that you will find all the lectures related to income from capital gains. Hope this is clear. Let us go and discuss our question and its solution now. So this is a question that I want to discuss with you, and this is a different question compared with the previous one. Here we are going to focus on one point. So this question I have taken from Hamsrala Publications. Author name is H. Prem Raja. So let us go and discuss that. Always I say one thing, understanding question is very important. If once you understand the question, solution becomes very easy. So here our question is that Mr. Mohan Raju of 84 years age, our assessee name is Mohan Raju, and what is the age? 84 years. He is super senior citizen. Okay. At the time of calculation of tax liability, we should consider this point, but whenever we calculate income from capital gain, we can ignore that. This is not useful while calculating income from capital gain. So super senior, seniors, non-senior, that is useful while calculating tax liability. Here they did not ask us calculation of tax liability. Let us go and discuss that. So he is owning a house, a building. Building is nothing but house, land and buildings. We should consider 2 years period actually to determine whether that is short-term capital asset or long-term capital asset. He is using that for running his business. Okay. On 1-4-2023, that is during the previous year, at the beginning of the year, the book value of the building is 15,30,000. Book value means present value of that building, that is 15,30,000. Whenever any book values are given in any question, in the place of cost of acquisition or indexed cost of acquisition, we should deduct only book value. So this is applicable only for depreciable asset. Building is a depreciable asset. So that is why they have given book value. Whenever they give book value, we are going to deduct that. And this book value, we are going to deduct only for depreciable assets. So book value is 15,30,000. Hope this is clear. This is a new point that we are going to understand in this problem. Calculate capital gain. They are asking us to calculate capital gain if it is sold out during the previous year for 18 lakhs. He is selling that asset for 18 lakhs. This is consideration received, and selling expenses are 50,000. This we are going to deduct from consideration received in solution. So consideration received is given, selling expenses are given, but they did not give when they purchased the asset, how many years they used, because we don't want to know that. Whenever book value is given for depreciable assets, only for depreciable assets, we are going to deduct book value only. We are not bothered about whether it is short-term capital asset or long-term capital asset. Hope this is clear. Let us go into the solution. So here whenever we do the solution, you already know this is a format that we are going to follow. On the top we should give the heading, that is computation of income from capital gains of Mr. Mohan Raju. Assessee name we should write here, Mohan Raju, for the assessment year 2024 and 25. This is a heading. Under that we should draw the columns, particulars, amount, and this is a format that we are going to follow, students. First item always is consideration received. Consideration received means selling price of the asset. So selling price of the asset is 18 lakhs. You can see here it is 18 lakhs. Let us go and record that. 18 lakhs minus selling expenses or transfer expenses. Those are given here. How much? 50,000. 50,000 are selling expenses. You can see. Okay, selling expenses are 50,000. Let us go and deduct that. So always this is a format we should follow in the order. And if we deduct 50,000 from 18 lakhs, we get 17 lakhs 50,000. We get 17 lakhs 50,000. and we should name it as net consideration. Hope this is clear, students. Okay, always after deducting selling expenses from consideration received, we are going to name it as net consideration, that is 17 lakhs 50,000. Next, after this we are going to deduct either cost of acquisition or index to cost of acquisition. But whenever book value is given for depreciable assets, only for depreciable assets, students, okay. So whenever book value is given, we are going to deduct book value only. So I will write book value here. Book value of the asset. Book value of the asset. We are going to deduct book value of the asset. Hope this is clear. Okay, buildings, plant and machinery, furniture, they all are depreciable assets. But sometimes they give you land. Okay, land, they mention in the question, they give book value. But land is not depreciable asset, it is appreciable asset. Then you should not deduct book value. Okay, so you have to do problem like previous one only. Only book value we are going to deduct if it is depreciable asset and book value is given in the question. Okay. So what is the book value here? Book value of the asset is 15 lakhs 30,000. Let us go and deduct that. 15 lakhs 30,000. So if we deduct that from here, how much we get? 17 lakhs 50,000 minus 15 lakhs 30,000. We get 2 lakhs 20,000. 2 lakhs 20,000. Okay. So we don't have any indexed cost of improvements and all here, and if you want to remove, you can remove completely. Okay, so if you want, you can remove it completely. If you want to keep it like that, you can keep it like that, and you can write nil if you want. Okay, here I am removing all this, and after deducting that, we are getting 2 lakhs 20,000 now. That is income from capital gain for us. Hope this is clear for everyone. This is income from capital gain. Income from capital gain is how much here? It is 2 lakhs 20,000. Okay, this is answer here. We don't have indexed cost of improvement. We don't have remaining the deductions under section 54. So we are having only income from capital gain 2 lakhs 20,000. Hope this is clear for everyone. Okay, if you understand the class, like the video, share it and subscribe the channel. And I will show the question as well as solution once. You can see that. So this is a question that I discussed with you. I already told that I have taken this from Hamstrala Publications. Those who are following Hamstrala Publications, if you want solution, you can understand this and you can watch the class and share these videos to other students, those who need it, so that it will be helpful for those students also. And this is a solution that we did. So hope this is clear for everyone. Like the video, share it and subscribe the channel. Thank you.